Alright, can you guys hear me? You can confirm in the chat, or you can confirm in the comments in YouTube. So if you can hear me, confirm please. 2 viewers. Look, I'm popular. 3. Alright, you guys are starting to roll in. I like it. Please confirm that you can hear me though. That way it says you guys can hear me, so I'm gonna give it just a little bit longer for some more people to hop on. Okay, cool. Thanks for reaching out and telling me you can hear me. Awesome, cool. Just gonna give you guys like a couple more minutes. We'll give it till 7:30, then start going over some charts. For those of you who joined, I know we got a new member today. I believe, if I'm saying this right, Kiana Felix. Welcome to the family. We're glad to have you. I don't usually go. Oh, okay. You can't hear. Strange. Okay, so some people can hear me and some people can't. I wonder why. I wonder if it's because of... Give me a second. Okay, cool. Alright, so, you know, it's funny, I tried to fix the problem by opening my closet door, which is where my Wi-Fi box is. They just installed really fast Wi-Fi, but YouTube is telling me that it's not enough video to maintain, so it's kind of weird. Okay, it's actually 7:30 here, Harry, so maybe if you have a 3-hour gap, I'm sorry that I'm doing this so late for you, but let's go ahead and get started. I'm gonna record this video anyway, so you guys will have the chance to actually have a chance to rewatch this later. But I'm just gonna go ahead and get started. So the first chart request that I received today was XSPA, and that's from Dylan. So Dylan, I already wrote your analysis and I already made this chart, but I didn't really make any of the other charts. So I'm gonna go ahead and go through XSPA for Dylan. Which I have here, tradingview.com. You guys know that I do all my charts on tradingview.com. That's my favorite website and charting interface. So I'm going to go ahead and start with the 1-day candles. So right up here I have the 1-day candles selected. So every single candle represents 1 day of movement. As you guys can see, XSPA popped off on May 22nd. And the reason why they popped off is because I did a little bit of research. It looks like on May 22nd, they actually had news that the that they were starting to do tests for COVID-19 at JFK Airport, which is really big news for a small company. So landing that contract was really major for the company, and so they actually went off. But as you could see, and this is the whole idea of not chasing a stock, the stock really went off. It opened right around the top at 103. It pushed all the way up to 116, but got pushed all the way back down at one point of the day to 0.73, and then closed at around 0.87. Since then, the stock has been moving down and consolidating, and then finally we saw it go off again today. So that's really that's a really important lesson that you guys need to take when you are looking at these stocks that really have massive days. If the news is actually legit, and if it's very beneficial for the company will turn around and have another massive day, and it will give you a safer entry than you chasing it. So stocks always have a tendency to come back down before they go back up. Anything like in life will need to load up a little bit of pressure before it shoots back up, and you can see that XSPA in this case did an amazing job of doing this. So the stock went off on May 22nd, and since then it's been about a week and a half. It has pulled back, and it has made a support for us at 0.75. So wherever the stock had bounced, you can safely say that that's a support. So that 0.75 where the stock bounced once, twice, and then held above it is now the 0.75 support. Now the resistance is any place that it got rejected. So you can see that the stock got rejected right at this point, and then it also got rejected right at this point at the top right over here. Now this is without extended hours. I'm going to show you guys some extended hours. This is what happened in the aftermarket. The stock pushed above this resistance, which is now considered a support because the stock pushed above it, and the stock made a high of about 1.30. So what does this mean for us, and what does it mean for the future of the stock? So considering the stock has had a massive run, we can expect a pullback. A pullback is always imminent in any stock that goes up. However, XSPA is news driven and hype driven, which means technical analysis may fly right out the window when we're trying to really read this stock. So you may see it push a little bit higher, but don't chase it on the way up. You always want to catch the stock on a pullback. And there's a good lesson to how you can determine if it's a pullback or a complete reversal, and that is by what support does it hold. So if the stock pulls back and it falls back to around the 1.15 support, that's completely fine, but that's not enough of a pullback. I would like it to fall back to about 0.95. However, if it falls below 0.95, that means the stock will go below this high, which is its initial breakout point, and it will fall below it, and then it will make a bearish trend to the down end. So you don't want to see the stock fall below 0.95. Now, depending on your entry, I would tell you at this point to consider taking profits. The reason why is because not only is the stock overbought on the RSI for the 30-minute candles, which was where I'm at currently, but the stock is also overbought on the one-day candles. If you take a look, the stock is well over that 70-point target, even near the 80-point target, which some traders will argue that over 80 is overbought. Personally, for me, I believe over 70 is overbought, only because I like to play it safe. So although the stock had a massive day and a massive increase, I still consider this not a perfect setup for you to enter. I do expect a bullish trend from the stock in the future. I do like what they're doing, and I think that contract that they landed is huge. However, I do expect a pullback because the stock does need to cool off. Another thing to point out is when the stock went off on May 22nd, it had a moving average crossover. So this crossover is really important because to traders, anytime that stock crosses over and it gaps over these moving averages, they look at it from a bullish eye. So overall, XSPA, I like what it's doing. I expect it to consolidate a few days longer. It may gap up tomorrow at open. If it does gap up, expect it to pull back to around the 1.15 or to the 1.30 area, which is the high that it made today. Okay, so let's see what's next. Next, we have Lake, also Dylan. So we have Lake by Dylan. And by the way, if you guys want to do more chart requests, please post them in the chat because I can pull up the chat easier than I can YouTube. So with Lake, this is as far as I've gotten with Lake. So the first thing I look at always is the one-day candles. What is the stock doing on a macro level? So you want to look at micro and macro levels. We've been over this, but I'll go over it again. I'm looking at one-day candles. So a couple things to point out right away. There's a crossover right over here. We just talked about these crossovers. Right when that crossover happened, the very next day, we see a massive massive gap up in the stock. However, just like XSPA, the stock needed to consolidate before making another big move to the upside. So the stock makes a massive move, breaks over all these resistance points that it's created before, moves over the 10 and the 20-day moving average, causing them to cross to the upside, and now is using the 10-day moving average, which is this orange line, as support to move it up onto the on and on. And so after this green breakout right over here, another green day for the stock, now I'm interested to see what is the stock doing on a micro level. So I'm gonna go ahead and erase everything on here, and I'm gonna go into the let's see if the 5-minute candles tell us a better story of what's happening. So I can already tell that Lake has somewhat of weak volume. It doesn't have as much volume as it needs. As you could see, these candles are like almost just straight lines across, which is kind of upsetting because the chart setup is so amazing, but it doesn't look like traders are paying much attention to it. However, that doesn't discount the stock. That doesn't make it any less valuable of your trade, but just keep in mind that volume does speak volumes, needless to say. And as soon as the stock does break out, I'm sure it'll pop up on traders scanners, and I'm sure they'll hop right over it. But as of right now, I'm sorry, it seems like there's some kind of technical issues for some people. But anyways, like I said, guys, I'm gonna record this and I'm gonna send it over to you guys as soon as I'm finished. So I'm gonna just continue, and if it persists, and I'm sorry, I'll go ahead and make sure to record this for you guys. But as of right now, Lake, here's what I'm seeing from it. So the stock had gapped up, so it was making lower lows for the longest time. The stock kept making lower lows and lower lows, and then finally you can kind of just see it. You can, and that's the beauty thing about the stock market. You can kind of see when things start to kind of want to change directions, and you could see that happening right over here. You could see how the stock started to bottom out right over here. The stock kept dropping, and then suddenly the stock started bottoming out, and then finally it had a gap up. So some of you may ask me, when is the perfect time to enter the stock? The perfect time to enter the stock would have been right here, and I'll point that out, and I'll draw this out for you guys. This would have been the perfect time to enter the stock right at this point right over here. The reason why is because notice how it played out a breakout play perfectly. The stock had made a resistance right around this area. It made a resistance of $14. After it broke $14, and the reason why this resistance existed is because it was rejected here. It tried to break out, but it got rejected again and got rejected again. So that was a strong resistance at $14. And then as soon as the stock gained some traction, it gapped up over that 14, and it got pulled back. And the stock will always pull back. A healthy pullback will always happen, and it pulled back to test that initial breakout point, and it bounced back up. Yes, it dipped below, and this goes for another lesson. This is why I tell you guys that you need to place your stop losses just below the support, because the support is not definitive, but it exists. But you need to kind of like a trampoline. You need to let the stock breathe a little bit. It's gonna go down. It may go below it. It may actually land just above it. So you keep an eye on that volume. As soon as the stock dipped below that support, you could see a spike in that green volume right over here, and volume speaks volumes, guys. And the stock starts to move on up. So your perfect entry would have been right here, and you can ride the stock up and place your stop loss just below that support. So now what happens to our resistance? So our resistance is going to be the highest point that the stock had made on that initial breakout. So the stock breaks out of the $14 area, and it makes a high of about $15.20. So we place our resistance right at that point. Stock gets rejected, and now we entered the stock here, and we're riding it back up. So expect the stock to consolidate a little bit longer here before breaking out again. Now, where is your price target? And all price targets are, guys, are the next resistances that exist for the stock. There's no rocket science to it. I'm not a genie. You're not a genie. Nobody in this world is a genie. They can't tell you what the stock is about to do. But all you have to look for is the very next resistance, and the resistance line is created by where the stock had gotten rejected before. So right away, when I look to the left side of the chart, this is called my historical analysis. Where has the stock gotten rejected before? And I could see right away that the stock got rejected right at this point. So my automatic first price target for this stock on a successful breakout from $15 is going to be $15.51. And then I create another price target after $15.51, and that's going to be right over here where the stock got rejected at $16.20. I do expect the stock to keep moving up. After this bottoming, the stock wants to go up. So it's important to note, though, that you need to keep updating your stop losses to after. So your stop loss will come after the stock breaks out of the very next resistance. So when the stock breaks $15, that automatically becomes your support, and you update your stop loss to just below $15. That way your stop loss is not still stuck at 14 and you ride the stock back down and you lose all profits and everything you worked for. You want to keep updating that stop loss as the stock keeps on moving up. You need those incremental updates as the stock keeps on going up. Now, we're going to move on to the next chart. There's a lot more lessons in this one, but I don't want to make this video too long. So we're going to move on to the very next chart, and that's going to be Julian. He asked for ERI. So ERI, one of our favorite stocks lately. ERI has really made a massive move lately, considering the economy starting to open back up. So people started buying it up, expecting vacations to start happening right away. So with that being said, first thing I look at again is going to be my one-day candle. So I'm going to clear this, and I'm going to go to my one-day candles. So another thing to note about this stock is right here we're seeing a bullish pennant pattern. So I'm sorry, a bullish flag pattern. So right away when I look at this, if I see something that kind of represents a bullish flag, I'm going to need to look into the more micro level and see what's really going on. And yes, you can kind of see an awkward move to the upside, and then the stock starts to consolidate right at this point. It looks like it tried to make a double top, but traders were strong enough to take it above, and they pushed it higher. But I still don't trust this chart. Here's why. When I look at the one-day candles, stock is still very much overbought. Buying the stock at this point would be a high-risk play. It may squeeze out another day of movement, but expect the stock to fall back and test the initial breakout point at any point now. And that's one thing to note when you're doing your charts and you're looking at the market. How many charts out there are starting to look overbought? I'm starting to see a lot of charts start to move into the overbought territory, which tells me that we're overdue for a correction. Since the crash of March, we've been doing nothing but moving up. With that being said, stocks need to correct themselves for them to stay healthy. It's like a balanced diet. You need to have that correction in your life for you to stay healthy, and that's how the stock market is. If you keep pulling and pulling and pulling at it, it's going to fall harder than ever before. So with that being said, I wouldn't chase the stock at this point. I would wait for it to pull back. Now, where is your pullback target area? And you're going to discover that through the previous supports, but you don't want it to go too low and reverse back to a bearish side. So as long as the stock maintains a price point that's above 30, one support is 32, another support is going to be 28, and then finally you're going to have a support at the initial breakout point of $24. So with that being said, I would expect the stock to maybe pull back to this point, but if it's still overbought, it may pull back to this point. If it's still overbought, it may pull back to this point. But if it falls below the $24 mark and it makes a lower low, lower than the initial breakout point, then the stock will start to diminish, and traders will consider it bearish because now it's going to the downside rather than the upside. So what you want the stock to do is come down, and if it comes down to 24, that is a blessing because we're getting the stock on discount. And if it bounces off the 24, now you're in for a treat because now it will bounce off the 24 and it will have enough breathing room on the relative strength index, or the RSI, to push back up. And your resistance point, the major resistance point it will have to overcome, will be the high that it made today at $40. Or if it has another day to push tomorrow, then it will be that resistance point. So I wouldn't really chase the stock at this point. I would wait for it to pull back. I'm going to actually set my alert on Thinkorswim around $24 because I would love to get this stock at 24 and ride it back up. But that's another note on not chasing stocks. Let's see what's next. So we have WFC, also for Julian. So let's see what WFC is doing. Oh, that's Wells Fargo. That's right. So let me take a look at the one-day candles. So, okay, impressive move. Still got a lot of room on the RSI. George, I will get to your question momentarily, sir. So I'm seeing a bullish crossover. The stock has consolidated since, and it gapped up today along with other major bank stocks. I noticed Bank of America also gapped up. Volume is strong, very strong for the day. One thing to note is look at sectors. So notice how I knew Bank of America popped off today. You have to look at sectors. When you see one bank stock going off, take a look at the other bank stocks as well, because it will give you a full idea of where the money is going in the market today. There's a reason why some of our alerts sometimes are literally all health stocks, and that's because sometimes money is just flowing into health. Sometimes money is flowing into banks, and that's just how you kind of have to play the game. You have to know what is going off and what's not going off. With that being said, Wells Fargo looks healthy. It looks like it just recently made a bottom right over here. And notice this, I'm going to take out my volume just for a little bit because I want to show you guys this positive divergence that we're seeing. So the stock had made a lower low. You could see that low, and then it made a lower low, but the RSI had made a higher high. So the RSI had made a positive divergence at this point. So although the stock went lower, the RSI went higher. Therefore, we knew that a reversal was imminent, and that's on the one-day candle. So the longer the period you're looking at, the more significant the pattern, or in this case the positive divergence would be. So I'm going to clear that, and I'm going to put my volume back on, and so I'm going to start to go into the stock and see what it's doing. So is this a healthy enough stock to trade in? So thus far, the stock looks like it has made a bullish reversal, which is awesome because I'm actually adding this stock to my watch list. I haven't looked at this stock before. This is my first time looking at WFC recently. So I'm going to lay out some groundworks for myself. So think of it like a building. You don't just go and pour cement into a hole and call it a building. You need a blueprint before you could trade. And I think that's the issue with a lot of traders, is that they get excited about a trade and then they automatically just throw their money at it. But it's really important that you need to lay out some groundwork for you to trade upon. So with that being said, this is going to be my support. The reason why is because this stock had broken over this point, which used to be a resistance, and it came back and it bounced off the support. It's like clockwork, guys. It couldn't be easier. Really, it couldn't be easier. The stocks always bounce off that support, so just wait. Don't chase them on the way up. It's so much better for your money in your wallets to not have to chase it on the way up. Because here's the story that happens to everybody. Happened to me for many months before I understood it when I first started trading. Stock would break out, have a massive day. I would buy the stock right over here, and now the stock's going up, and all of a sudden I lose all my money. And on the way down, right where I bought it from, I would sell the stock right around here because I get scared that I'm going to lose money. As soon as I sell it, the stock goes back up, and that's the problem that all traders have. Instead of buying at the top, wait for that pullback and make sure that bounce off the, and then buy the stock back up and put your stop loss right below. It could not be simpler than that, but it takes patience, you guys. You need to have that patience for your trading to be successful. So with that being said, let's move on. So we made a support at $26. Where is our resistance, and where is our second support? So I'm seeing another support right over here. The stock had came down and bounced back up, and now I'm seeing another support right over here because the stock got rejected at this very point. If you zoom in, the stock came up, got rejected, pushed back up, gapped over. Today it gapped up like most other bank stocks. So you want to put your support right around the $28 point. The stock may come back down and push back up. That would be the most ideal thing. Where is our price target for this stock? The price target is going to be the very next resistance that it created, which was right over here, right around April 29th. So our price target for Wells Fargo is going to be $30.50. So don't expect the stock to just shoot up to $30.50. It may consolidate a little bit longer and push up to $30.50. That's just our first price target. But a stock like Wells Fargo, you got to really think about it here. Do you really think it's going to stop at $30.50, or do you think it's going to go higher? Obviously, if you look at the historical analysis, Wells Fargo was trading for $55 before the stock market crashed last month. yes, it has been in a downtrend, but it's nowhere near the true value of the stock. So you always want to look at the historical analysis before you jump the gun and say that, hey man, this stock's going to go to the moon. Well, look at its history. Did it ever go to the moon? Is it coming back? What is it doing? So $30.50 would be the very next price target, and then after that the price target would be $34. By the time it reaches $34, the stock will definitely be overbought. So don't get too excited when it reaches $34 and keep holding. I would get rid of this stock at 34, wait for a pullback, wait for it to cool off, and then my next price target for it will be $36, and so on and so forth. But we'll update that as time moves on. Alright, what's next? So we covered Julian, WFC. Raymond, you asked for Apple and NVAX. So Apple, let's see what's going on. I hope you guys didn't see that message. So with Apple, well, one thing to note about Apple is it's about to make an all-time high, which is a really cool thing. I love this stock. This stock has always been good to me. It's been good to a lot of people because Apple just keeps on moving up. And I want you guys to take a look at this V-shaped recovery that not a single person believed would happen, but the market did have a V-shaped recovery after that crash, and Apple has been a lucky winner since. So if you caught Apple near March 18th, then you are a lucky winner. But with that being said, what happens if the stock breaks above the 328 resistance, which is the all-time high that the stock has had? Well, one thing to keep in mind is if you are looking for a stock to break over an all-time high, you need to very much look at the one-day candles, because you want to know what the RSI is doing. The RSI is still not overbought. Very, very good news. But what is bad news for this company right now? And it may actually pull back before it breaks over that resistance. The reason why is because of this candle right over here. So this candle means that there is indecisiveness in where the stock wants to go. Another thing to keep in mind is volume. Volume seems to be a lot weaker the last 3 days in this stock than it has been in the days before that. So this candle that looks like a cross it just means that the stock had opened and closed at very close price points to one another. So the stock on a green candle opens on the bottom of the body and it closes at the top of the body. So the stock opened at $324.50 and it closed at around $325.12. Through the day, the stock had made a low of $322.30, which is the bottom of the wick, and the top of the wick, it made it all the way up to $326.20. Now, considering the stock had made this candle today, it won't tell us the full story of what it's about to do until tomorrow. So if tomorrow we see a large red candle, then yes, expect the stock to fall, and it will likely fall harder if the red candle closes below that 10-day moving average. But let's say that doesn't happen. What happens if the stock breaks out? It will have a pretty monumental breakout because everybody is watching Apple, and it's kind of funny how everybody's expecting Apple to break out first, but it didn't. It didn't make an all-time high first. I believe Facebook did out of the really big FANG stocks. They call them FANG, which is FAANG, which is Facebook, Alphabet, Facebook, Amazon, Apple, Netflix, and Google. Those are going to be the FANG stocks. They don't talk about them like as the FANG stocks anymore because there are a lot of other powerful stocks, but Apple is considered to be one of them. Personally, I don't really like this chart because I feel like it's squeezing a pattern. Typically, anytime stocks squeeze a pattern like this, they're just going to go back down. So if Apple does make a double top here, it'll be really bad news for the market. And if you don't believe me that stocks that make this pattern usually go back down, I'm just going to go ahead and swipe to the left a little bit and show you what happened here. So you see the stock had done the same thing here and got pushed back down. So trust the charts and keep an eye out on any of these patterns that may happen. Even if you don't believe that they happen, you need to keep an eye on them. You need to take note. Now, they don't always follow through, but keep an eye on them at all times. So the stock could very much make a double top here. But if it does break out, which hopefully it does, the stock will likely push past 328. I can't give you a price target for it because we have no history of a higher price target or a resistance. So the stock will break out, make a massive high. Don't chase it on that breakout. What you want to always wait for is the pullback. Same thing we talked about before. Stock will break out. It may make it to $340, but it will, and I guarantee you it will pull back to the initial breakout area of around $330, giving you a perfect entry before you get to ride it back up. And the stock will probably go to $400. It's Apple. They're only going up. Don't quote me on that, but they're only going to go up as long as markets stay healthy. Alrighty, so what's next? We're going to go through NVAX. NVAX, oh man, that is a tough one to be in. I hope you guys are not holding this stock, because you typically don't want the stock to fall below a 10-day moving average, especially with this much volume. And I'm assuming it's because the stock didn't make it to the top 5. I'm not quite sure. I didn't really research the top 5 companies that Donald Trump had announced, but it doesn't look like the stock had a good day at all. The stock had a massive fallout, and it really, the only support that it really found was right around the 20-day moving average. You see the stock dip just below it on that wick, but it managed to bounce back up and close right under its 10-day moving average, right above its previous breakout point. So if the stock falls further tomorrow, then I would leave this stock alone. But if it manages to stay over this $44 mark, that means it's just retesting the initial breakout at 43 right over here, and it will push back up. So let's see what it's doing on a micro level. So we can see that the stock had got brought back down. Now, it's funny how it always correlates with the media. Anytime a stock becomes overbought, the media somehow brings it back down, but it always brings it back down to the exact level that it broke out of. So this is why I tell you guys to trust the charts and not the news, because they go hand in hand. You need to keep an eye on both, but always trade the charts. So the stock got pushed back down to the initial breakout area of about $40 before it bounced back up. And now what you need to keep an eye on for is if the stock does keep this $40 support. So you do not want the stock to go below that $40 support, because if it does, then you are I'm sorry, let me just clear all these out of your way. Because if it does, then the stock loses that $40, and then the very next support it has is going to be the bottom right over here of $37.40, and then you got to keep making supports from here on out, and it can fall all the way back to 28. Now if it falls back to 28 and bounces, then you're getting the stock at a really good price. But this is a tough stock to be in. I really would not trade it as of this moment. I would just kind of leave it alone. If you're in it, then make sure you keep an eye on that $40 support and that $37.40 support as well. Kiana, I'll try to get to Gush, I promise. So Amir, TTD. Okay, we're gonna try to power through these. Right away, I'm looking at the trade desk. Amazing move. Look at that beautiful breakout. So we have first a double bottom. You know, I could see that right over here. It looks like a W. It's not a perfect double bottom. It doesn't always hit right at that same place, but there's a double bottom here. Stock had broken out. Stock came back down. Stock broke out again. Broke out again. Came back down. Broke out again. Came back down. Broke out again. Came back down. And now it broke out of its all-time high. So as you can see, stocks, when they break out of an all-time high, they make really big moves. But keep in mind that in order for this stock to break out of an all-time high, it didn't make its breakout at this very point right over here. So a lot of people were fooled to think that the stock would break out right over here. And why were they fooled? Is because they didn't pay attention to the RSI levels. Obviously, a stock that has an overbought RSI is not going to keep pushing up, especially if it's trying to break out of an all-time high. So this was a trap to people, I would say. And so the stock tried to break out, but it fell back. And I love this fallback because it consolidated so perfectly, and it managed to stay above this breakout point. The stock had made support right around this breakout point, which is the last breakout point that it had. So the stock had broken out and consolidated, and then when it finally broke out, it gave us a perfect pullback and failed to break out right over here, came back, but it maintained that support of 267 the whole time, bounced back up, and then consolidated right at the top. And that's the thing about stocks, is you need to keep an eye on them, because they'll break out when you're not expecting it. Just like Work did a few weeks ago. Stock breaks out. Right away, I noticed on this breakout, the stock, as it pushed back up, it made it to about 356, but the RSI is becoming overbought. So I know you guys can't answer this because this is live, but what do we expect to happen next? The stock will pull back. it will pull back to around the $330 area and give you a perfect entry for you to ride that stock back up. Do not chase. I promise you there's always a pullback, even when it feels like there isn't one. Let's take a look at what this stock is doing on a macro level. So even on a macro level, this chart is starting to become a little overbought. I love the volume. This stock is going up. I promise you the stock will continue to go up unless it falls below the 283 area somehow with market conditions. But so far, everything about this chart says bullish, but it will have its pullback because this needs to cool down. The rubber band cannot be stretched that far before breaking. So this RSI needs to cool down. It may have one more day, so it will gap up, but I promise you it's going to come back to around the 330 area. Alrighty, so Alta. I know that's a popular one today for you guys. So Alta, let's see, did they have earnings? Because TradingView isn't always as accurate with earnings. So nice move by Alta. I'm seeing a bullish flag right over here that was formed. You see this stick and then this flag kind of, and then it pushes above it today. But it got rejected right around the you see how the stock had gapped down that day. This is the gap that it needed to fill, so the stock stopped right at that gap, at that corner right over here, and it got pushed to close below it. So with that being said, what do we expect the stock to do next? The one day candles aren't really giving us much. I love the gap up, but they're not really giving us much. So let's go ahead and see a more micro picture here. So what we're seeing here is, I'm not really liking what the stock is doing too much, to be honest with you, because it doesn't seem like it's flowing in a way where it's setting up a really perfect breakout for us. So I would give this stock another day of development before going into it. Personally, what I expect it to do is probably dip back down to around 240 before testing the resistance to go back up, because I'm also seeing a negative divergence right over here. So the stock is at a level in which before, but the divergence is negative. So I would leave this one alone. One thing to quote Warren Buffett on is, and I believe this was Warren Buffett, is if you don't know what the stock is doing, then leave it alone. And an amazing quote to live by, because you can't force your trades, you guys. You have to know what the stock is doing before you make the trade. Okay, so DKNG, Harry, you requested this one. Alrighty, so this was the setup that I gave you guys actually on the watch list on Sunday, because I expected the stock to push back down, in which it did just a tiny bit, but the stock was so strong that as it pushed back down, it maintained that support around $36 and it pushed back up. But as you and this is about, you will never catch the bottom or the top. By the way, if you're not familiar with DraftKings, they're a recently IPO'd stock, so they just had their initial public offering not too long ago, so they just recently became public. So there's a lot of hype around them. Number two, you'll never catch the stock at the bottom or the top. This stock specifically, we were planning on shorting the stock or buying puts on it. So we thought we caught the top around right around $40, but unfortunately that was not the case. The stock managed to push back up, and it took some time for its pullback to happen. So with that being said, I want to look at the macro picture. So you can see that the stock had been making higher highs forever and a day ago, but we had a candle, a really strong red candle, the very next day, in which we assumed that it would happen. So we had put out our chart for this to happen on Sunday, and the stock looks like it got its reversal just a couple days later. I wouldn't really chase the stock on the way down at this point. I would wait for it. If you really want to trade it bearishly, I would want to wait for it to break below that higher high that it made right here. So I would like the stock to actually push below 37.50 and fail to go back up. That way we can confirm that the stock is going back down. So one thing, like I said, to keep in mind is this is a recent IPO. So with recent IPOs, they move based on a lot of hype, and they may not follow technical analysis and technical indicators to the T, only because when it comes to technical analysis, you need a lot of history to reinforce it, and with a new stock on the market, you don't have that much history. But one thing that I'm seeing on the 2-hour candles is a good lesson is this is a bearish engulfing candle. So this is why it's important to switch back and forth between time frames, because if you were on the 1-minute time frames, you probably wouldn't have caught that the stock had a bearish engulfing candle. And what a bearish engulfing candle is when a stock overpowers the candle before it with a really strong red candle. So this 2 hours of movement completely overpowered the previous 2 hours of movement. Therefore, the stock continued its trend down. Alrighty, so who's next? We have EPD with Lorenzo, my man. Alright, EPD, let's see. Oh, I have a lot of comments from you guys. Oh my gosh. 1 second, it took like 2 minutes. Yeah, sorry guys, there's a lot of I don't know what's going on with my network. I'm not sure. But EPD. Okay, so Enterprise Products Partners LP. So what's going on here? We have 2 hour candles. Let me take a look at the 1 day candles. So this is called a hanging man candle, and as the name kind of speaks, hanging man is not going to be the best play for you. So a hanging man candle typically means that the stock is about to have a reversal. Now, it doesn't guarantee a reversal. The very next candle will tell you more of a story. But the reason why is because when you look at this candle, you really have to know what story it told you. So the stock opened at the bottom of this candle, made it all the way to the top of $20.50, but there was so much bearish pressure that it couldn't keep that place at all, and it got pushed back to close at around $20.10. So this long wick at the top means that there was bearish pressure coming in from the top to push the stock back down. Now, this does not guarantee that the stock will fall back, but it may help if we look at the more micro picture. That way we can kind of see and level out with the stock. And by the way, it's not overbought just yet, so it may have a little bit more room to run, but not really liking that candle too much. So when I look at the 3-month pattern, what am I seeing on this stock? I'm sorry, yeah, the 3-month pattern. This is 1 hour candles. What am I seeing on the stock? I'm very much seeing a gap that it needs to fill. So the stock managed to make it just above that gap down price, but it needs this entire gap needs to be filled for the stock to really be in our realm of how do I say this? In our realm of possibilities for good trades. But you can capitalize on that fill. So the stock may very much try to fill that gap within the next few days if that hanging man candle does not confirm reversal. So what I'd really like the stock to do is I'd like the stock to push up above $20.50, which is the resistance it made today, and I'd like it to pull back to retest that support and then push back up to fill that gap at $22 exactly. We're gonna power through these, guys. This video is taking a lot longer than I expected. I don't want to keep you guys here all night. VXRT. So I got 3 more charts for you guys. VXRT. I believe, yeah, I'm familiar with this stock. We've traded it before. So let's see what it's doing on the 1 day candles. Yep, not a good day for the stock at all. Not liking this at all. I wouldn't trade it until it develops a little bit longer. I think you guys already know the story. Stock had came down below the 10 and the 20-day moving average. It almost became a bearish engulfing. I would let the stock develop a little bit longer. I will give you your supports though. If you're watching, you have a support at $20.50. You have a support at $20.35, and then you have another support at $2 exactly. I'm sorry, I didn't mean to say $20. I meant to say $2. So $2.50, $2.35, and $2. So those are your supports. Your resistance point for the stock to become bullish again is going to be $3.50. Yes, there's a resistance at $3. The stock will need to make a high over it, come back down, make a high over $3.50, and push back up. I highly doubt that this stock will do that due to the fact that that red candle occurred today. So I wouldn't trade this one as of right now. I would just kind of leave it to the side and keep watching it. Starbucks. Okay, awesome. I love this. Let's see what this stock is doing. So 1 day candles looking strong as ever. Actually, the stock came down to the 10-day moving average, bounced right back up. Look at that strong close. There's not a long wick at the top, there's not a long wick at the bottom, but that candle's body is so strong that it pretty much consumed the entire day. Volume is strong, not overbought on any of the candles, and it's testing that $80 resistance again. It's tested it about 4 or 5 times. The more times it tests it, the stronger the breakout will be, and so it's looking like the stock wants to break out this time. I really hope the stock doesn't gap up tomorrow because I wanna catch it on this breakout. Very next price target is the very next resistance, which if you zoom into the left side of the chart, it tells you everything. This was the next resistance at $82.50. So our price target for the stock is $82.50. You can play it one of 2 ways. You can enter the stock below the $80 resistance and wait for it to break out. Use the 76 as your support, or you can play it more safely. The stock will break out, make it to about 82.50. It will pull back. It will give you a perfect entry around the resistance of $80, which will become its support, and then it will push back up to try to test 82.50. On that breakout, you want to take a look at the very next resistance, which in this case is going to be around $87. So ultimate price target for this stock will be 87 initially, and then 90. So 82.50, 87, and then 90. But definitely the stock wants to break out. I'm loving what the stock is doing. Thanks for bringing it to my attention. I will probably play this one myself. Don't rush the trade though. You have to make sure that the setup follows through. And finally, Kiana, again, another Q in the group. I love it. Let's do Gush. Jeez, let me zoom in on this one. Oh, here we go. Okay, so let's take a look at what the one-day candles are doing. Another hanging man candle. So not a good sign so far, but that doesn't exclude it, because I'm seeing there's a lot of bullish volume, and it has plenty of other room to run. Now, to be quite frank with you, I don't understand. I don't know this stock too much. I don't follow it that often. So it may act in ways it may act differently to the oil sector than I expect it, and that's only because it's also a double leveraged index. So you have to keep in mind those things when you're trading. You have to know what sector the stock is in and how does it react to news, to oil news, especially oil and gas. But I know that oil and gas in general are starting to move back up, which we're seeing the stock do. I'm not liking this candle too much, but let's not exclude it completely. Let's go ahead and take a look at what we could do on the short-term candles. So stock had made it all the way to 42.13 today. Let's see if it did anything in the after hours. It did not. But see, it just doesn't. But it got rejected. So it's been rejected here a few times before. Now that I'm looking at it, let me zoom out a little bit. That way it doesn't give me. Here we go. So it's been rejected here a few times before, and so this breakout will be massive for this stock. The reason why is because it's been rejected so many times off that resistance, and there's really no other resistance to stop it other than the $35 resistance. So if this stock does indeed break out over, I'm sorry, not a $35 resistance. Let me take a look a little bit. This chart is acting super strange. The resistance that it has next is going to be, okay, I just don't see what the stock is doing. One sec, guys. Sorry. It's the beauty of going live, right? You look like an idiot. Let me see what the stock is doing. Because if I zoom out too much, it just ends up kind of messing with me. There we go. Did this stock have a reverse split recently? Can't tell. Yeah, I'm assuming they reverse split recently. This is why their chart is off. If you're not familiar with what reverse splitting is, it just means that the stock pretty much there's a ratio in which they split it accordingly to the price to make sure that the stock stays on the market. As of right now, the stock has a resistance of about $43. I don't know if you're in this stock, Kiana, but I would kind of stay away from it until it makes a high over 43. And I will try to take a look at the chart a little bit more in detail. Just because they recently, I'm assuming, had a reverse split, which is causing this chart to look a little bit different and weird. And just like I said earlier, if you don't know what the stock is doing, then stay away from it. But just keep in mind that you have a resistance of $44 next. If you're in it, then I would set my stop loss right around $40, and I would make sure that it doesn't dip under. But either way, I'm sorry. I wish I could have done more for this chart for you. But I when it comes to reverse splitting stocks like this or charts that look like this, you kind of want to stay away from them until they really make a move over that resistance that they keep getting rejected at. All right, so we did Gus, Genus 2 because I'm still in. If it goes under 40, put is a play. Are you referring to Gush, Julian? If you are, then I would kind of stay away. I would not. Oh, okay. So Kiana is in that stock. So Kiana, I'm gonna make you a private chart on this one because it's not really working on my live. So I'll make you a private chart and send it out in the day trading chat for you. That way you can kind of have a still picture of what you should be looking for when you're trading Gush. I think you asked Jillian about Gush. No, do not play a put on the stock because, like I said, we don't know what it's doing. Let me look at Genus real quick, and I'm going to take a look at Moderna and TLRY as well. So those are going to be the last 3 charts. Oh, just kidding. I don't want to miss your stuff. So let's do play. VTIQ. Oh, wow, I missed a lot here. Okay, so let me take a look at play first. Who's Mr. Aviationist? Aviationist. Okay, so play. Oh wow, that is nice. Look at that gap up and look at that volume flow in. So that's really impressive. Dave and Buster's came to play. They're not joking around this time. So I'm impressed by the amount of volume that flowed into the stock. One thing I want to know is why. Why did the stock gap up with that much volume today? And I always look at the news section. Oh, there it is. Why is Dave & Buster's stock surging higher today? Dine-in restaurants are on the rebound. Shorts are rethinking their positions. They're about to report earnings on June 11th. Okay, so it doesn't look like there's any like really crazy headlines. But you could see that on the first, somebody had literally give a headline saying, "Are option traders betting on a big move from Dave & Buster's?" And what do you know? June 2nd, it has a massive move. So one thing, that's another thing. Keep an eye on the news, guys. They will literally give you an insight. Do not trade the news, but keep an eye on them. So massive move on the stock today. Managed to gap up over this red candle, which is its previous resistance. So if I were to look at this chart before it made this gap up, I will tell you that it has a resistance point at this point, and it has another resistance point right at this point right over here, and the stock managed to break above both of them today. So what do we expect the stock to do from here? And like any other day, we would expect the stock to fall back to around the support and push back up, making this high point of the day its resistance. So the 1722 is the resistance point. So what the stock will do is it will likely come back up. And one thing to keep in mind about Dave & Buster's is they have earnings right around the corner. So you guys all know how I feel about earnings. I simply don't play them, and the reason why is because why play something that you can't control? It's just a gamble. If you want to gamble, go to Vegas. So once again, this is what I expect the stock to do if it didn't have earnings. Hopefully this happens before earnings. Stock will likely come back down, test that support, go back up, come back down, push back up. Liking what this stock is doing. I'm going to keep an eye on it. I would say it's a little too early to say that it's safe to enter, but I'm definitely going to keep an eye on it. Tomorrow will tell us the full story. Good find. Thanks for bringing that to my attention, Mr. Aviationist. I just can't seem to get it right. Okay, so who do we have next? VTIQ. Harry, man, you kill me with that one on a daily basis. But I'm happy to do it. All right, cool. VTIQ. So what are we seeing here? So this is a pregnant harami candle. So you don't want to see a pregnant harami candle because they typically mean that there is a reversal coming, and this is telling you that a reversal may be coming in the near future. So what a pregnant harami candle is pretty much is if the stock has a red candle followed by a green candle that's in the center of it, that means that it's a bullish trend, which is a good sign for you, just like it happened here. Now this wasn't as severe, but you could see that the stock had the same kind of idea and it pushed back up. And here we're seeing the same exact thing. So it's about time that the stock took a breather. It really needed a breather after that long run it had, but it made a perfect setup for us. So we see that the stock made a high of $38 on June 2nd, and then on June 3rd, which was today, the stock had came back down just to cool off after that really strong run. And so now what we're looking at is what did the stock do? And the stock, what it pretty much did is exactly what we expected it to do. Notice how the stock had tried to break out from $30 resistance multiple times. It finally did. It pushed all the way up to 38, giving us a resistance, and it pulled right back down to that support. Bounced perfectly off that support. It's so easy, guys. I mean, really, it's all about patience, And say the stock never pulls back to that support and you miss it. There are thousands of other stocks that you could trade. Doesn't always work out to your preference, but this one did. So the stock pushes up, gives us a high. So that's our new trading range, 38 and 30. Stock comes back down, bounces up, and now the stock is right in the center, giving you a perfect entry. So you could enter the stock anywhere here, set your stop loss just below 30, and expect it to come back up to test 38. Now it may not go back up to test 38. It may fall below 30, and your setup didn't work out very well. Oh well, move on to the next stock. Not all of them are going to be winners. Let's see what's next. Play VTIQ, Moderna, TLRY. Okay, so let's take a look at a mRNA. Let's see what the stock did. Not really liking what the stock is doing as of right now. I know it was a green day, but just like how we saw this happening on the way up, you notice how the stock got rejected at the 20-day moving average and got pushed back down. So it's just vice versa. You flip the switch. This is kind of a bearish sign, especially the fact that the 10 is crossing below the 20-day moving average in this case, which is also another bearish sign. So I would stay away from Moderna for now. Wait for it to maybe bounce above the 20-day moving average before making any moves on it. So not really looking too good on this stock right now. So if you're in it, I'll tell you your supports. Just ask me for them. If not, then I'm sorry, but I wouldn't trade the stock for now. TLRY, TLRY. Very small move today. Look how thin that candle is. There's barely any movement. But it managed to bounce off that 10-day moving average. Let's see how it did though. Okay, so I'm liking what the stock is doing. Not a bad outlook so far. Let's see if we could draw some support lines. So the stock had made a resistance right over here around $9.45, got pulled back down, managed to gap up over it, and then it made a high over it to around $11.60 before getting pushed back down, tested the support once again, and now it's kind of consolidating. You can enter the stock anywhere in between these two price points. This is your trading range. Put your stop loss right before 9.50 and let the stock ride back up. I like what the stock is doing. It looking like it's trying to make higher highs. Your next price target is going to be around $13.20. Good find. I like it. Not the best setup, but it's a pretty good stock. And then finally we have SPY. So let's take a look at SPY. If you guys don't know already, SPY represents the S&P 500. So it's really important to look at the S&P 500 when it comes to your trading, because stocks tend to follow the entire market, and you got to remember the entire market is made up of these stocks. So if the market is moving down, that means the stocks are about to move down with it, vice versa. So we're looking at the one-day candles. Still not overbought, guys. I know all this news is coming out that, hey, we're about to come back down, we're about to drop. The reason why is because why we haven't dropped yet is because we're just not overbought yet. I mean, we were so oversold by March 18th that we needed to bounce up. We just needed to bounce up based on technical analysis. Same idea goes for the drop. We're not going to drop till we become overbought. And now we're starting to pierce the 70. We're barely starting to pierce the 70 points. So expect a drop within the next 2 weeks. Reason why is because we're going to become overbought if we keep this up. Stocks just naturally do not move that high up that quickly. This is almost a vertical move. Once we become overbought, you will see that the headlines will start to come out, and all this negativity will start to come out, and all of a sudden we're starting to fall back down. It's just the news controls the market, but you don't follow the news, you follow the charts. So strong day for the stock market today. Volume has been increasing on a daily basis. Fully green candle, barely any wick at the top. Next resistance that we have is going to be around $314, which is the top of this candle right over here where the stock market got rejected. So far so good. Expect the market to maybe pull back to the 307.50 mark. So you guys know how in the mornings we have these like massive sell-offs and everybody gets super scared. It's only because you guys lose track of what's important. So during a massive sell-off, don't be so quick to start buying puts. You need to keep an eye on the entire market and what it's doing. So it's the best thing you could do is to lay out some support lines for yourself, some guidance. Lay them out, that way you can see them. If the stock market opens high tomorrow, expect it to fall back. And if it starts to fall back, Wait for it to bounce off of the 310. Wait for it to bounce off of the 308. Now if it doesn't, and it keeps falling back down, and it falls below the 306 line, now we're going to start making lower lows, and that's going to be when we're in trouble. So you want to keep an eye on those supports. So far I'm liking what I'm seeing, but I wouldn't be too surprised if we saw a pullback to the 308 or the 310 mark tomorrow. I just wouldn't. It's just a natural thing that will happen every time, just like how we did here. You see how it pulled back, bounced right off the 300 before continuing on up, struggled a little bit, but it bounced at the end of the day. Same exact idea, guys. Not really much going on here. Overall market still looks healthy. We're not overbought yet, but we're overbought on the short term. As you can see on the 30-minute candles, we're overbought. So a pullback is imminent. So don't be too quick to sell off your positions tomorrow. Make sure that you keep an eye on SPY. Make sure that it bounces off these supports, and you'll be in solid ground. Also, another thing to keep in mind is when you're looking at this pullback in the morning, it's probably a good idea to enter your trades on the pullback. You know, why enter a trade on the way up when you can see that the market bounced off 308 and all the stocks will follow, and you can just enter the stock on the pullback and catch it at a really good price. But anyways, guys, I hope this was really helpful. It's coming to an end, and I will make sure that this is recorded and set up for you guys. Thank you so much for joining. I love all of you in here that you guys came and supported. If you didn't catch this video, then I will have it uploaded. Anyways, guys, thanks a lot for watching. Bye bye.